Still recording. Hi, everybody. I guess we're back. It's 10:30. Had a couple of things to go over before we get into bank reconcilements. I know some of you had some issues connecting, or you couldn't find the email with the link. So if you can shoot us an email at cities.towns@sba.in.gov, and we can try to send you the link. We've done that with a few people, and some people even the link isn't working, so there may be an issue for them. But we are recording this, so they'll be able to see it at a later time if they can't connect. The other thing we wanted to do, and before we go any further, is say the Pledge of Allegiance. We like to do that at conferences the Board of Accounts is involved with, and sometimes when we're like at the annual conference, that gets done either the day we're there or maybe the day we're not there. But we wanted to do that this time, so at this time, would you please stand and say the Pledge of Allegiance? I pledge allegiance to the flag of the United States of America, and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all. All right, thanks. We will go ahead and get started with bank reconcilements. Sometimes that seems like a pretty simple task or a simple procedure to go through, but you'd be surprised at how many times that's an issue during an audit. And so we want to take some time to cover this and maybe help you with issues you might have during your bank reconcilements. Performing a reconcilement to a bank reconcilement to your accounting records that you're responsible for is an important step in what a clerk treasurer does. It ensures that your records and activity on your records matches the activity in your bank accounts. Reconciling is such an important part of your duties that the Indiana General Assembly created a law requiring you to do so. Indiana Code 5-13-6-1, letter E, requires you to reconcile the balance of your accounting records or your ledger to the bank balances at least monthly. So during an audit, we're going to examine that the reconciliations are performed monthly and that they, in fact, reconcile. We see a fair amount of comments and findings in our reports related to bank reconcilements. Sometimes they're not even done at all, like I mentioned. Back when I was out in the field doing audits, I know there were several times where we would go into start the audit, and usually the bank reconcilement was one of the first things we looked at, and we would find maybe they're in a drawer and you go to pull one out and they're all still in the envelopes. They hadn't even been opened yet. This was in the the time before the internet, so it's not like someone was getting that information online. It was a bank reconcilement came every month and no one even opened it, so we knew there was no reconcilement going on, and that could lead to some other things, especially if no one's looking at that. The other thing we see is it not being fully reconciled. You should not have any variance when you're doing the reconcilement. Everything that happens in your bank account should be reflected on your records and vice versa. And internal control related, no one else being involved in the reconciling process is another common thing that we find. Those internal controls either don't exist to have someone else involved, or they're not documented properly. I'll talk about that a little bit later on. So if you're one of those people that reconciles your personal checking account to your bank statement balance every month, this isn't probably going to be anything new. And I say that my daughter, who's a freshman in college, got a bank account over a year ago, and I started to show her this, and she was like, "Dad, why do I ever need to know this? I can just look online and see how much money I have in my account." And I was like, "Oh, you're the daughter of an auditor, you can't say that." So we had to go through the bank reconciliation process, and I'm just trusting now that she's off on her own at college, she will do that, or at least be cognizant of what's going on. But if you do that, doing it for your city or town accounts is just the same. In the illustration on the screen, you can see that the cash book or ledger, whatever you call it, has a balance as of the date of whatever date this is in the example of $1,500. And the bank statement balance at the same date is $1,760. Trying to move my cursor. Yeah, here, that's not moving very well. So there's a difference there of $260 that needs to be identified so as to reconcile the two. So let's go over some of the basics on a reconcilement and what things that we might look for in an audit setting. If your city or town has a computerized accounting system, then that system most likely has a reconcilement feature within it. When you reconcile electronically, you will have all of the basic information that we're going to cover here. It'll just be in electronic format. That electronic reconcilement will need to be available for our field examiners to look at during the audit of your city or town. So if that's stored within your system, when we come in, if we need to see something that we don't already have, we may have you pull that up. Just be sure as you're saving your reconcilement electronically or any documents electronically that we might need during an audit, make sure maybe to test periodically that those files haven't been corrupted or damaged in some way, because we have seen where we've gone in and asked for a file that's being maintained electronically and it can't be opened because the actual data in the file has been damaged somehow and the file won't open. If you don't do the electronic reconcilement, or if you have hand-posted records, you can use a template or here on the back of a bank statement, or you can design your own template. If you're doing that reconcilement by hand, you'll want to obviously keep copy of it because we're going to need to see it. If you start with what's shown on the screen, which is the copy of my personal bank account, the back of it, the banks usually give that to you. So even if you get your statement online, usually that page with the reconcilement template on it is there for you to look at. If you happen to get your statements by mail, which I think some of you still do, it will be on the back, usually of the first page. But whether you have a computerized accounting system or electronic reconcilement that your computer does, or if you write out your reconcilement, your monthly work that you reconcile should be documented and available for us. So even if you have very little activity in a month, or maybe you're a very small town and you don't have any activity, or the bank balance happens to match exactly with your ledger balance, you still need to document the reconcilement somehow to show that you've at least done that. Someone else with internal controls has been involved in that process and has seen that you are actually reconciling. So here's an example that we're going to go through. It's a very basic example. It has only one bank account, and what you're seeing now is the top portion of the reconcilement. So we're going to go line by line. So just pick the example month of March 2019. And in the format I'm using, we'll start with the bank statement balance at March 31st. Other formats might start with the ledger balance and then reconcile back to the bank. And then there's one I'll show you in a bit where you reconcile both using adjustments on both sides. That's kind of what's on the back of your bank statement, but we'll look at an example like that here in a second. As I mentioned, this is only has one account. If you have multiple accounts, the concept would be the same. You just list each account, and I'll have an example of that later as well. For this example, we have deposits in transit. These are monies that you've collected, posted as a receipt to your ledger, taken to the bank and deposited, but due to timing, the deposit doesn't show up on your bank statement at the cutoff date, and therefore it's not included in your statement balance. So you've got to account for that difference when you do your reconcilement by adding that amount back. So as you can see here, we have two deposits that were made toward the end of March. They didn't get posted by the bank and therefore included on your bank statement by March the 31st when they sent the statement out. So you're going to have to account for that in your reconcilement by adding that amount back to the bank account balance in this example. Also for this example, we have some outstanding checks. These are checks that you've written and posted as a disbursement to your ledger that haven't been paid or cleared the bank yet. So you've reduced your ledger balance by these checks, in this case $5,170.54. The bank still has that money showing in your account balance because it hasn't cleared yet. So in this case, you would subtract the outstanding checks from the bank account balance because that activity hasn't been reflected by the bank yet. So expanding to see the entire reconcilement in this picture gives a little more information of what things you might run into. But most months are going to have some miscellaneous reconciling items. These can be items not normally associated with monthly activity, things that other than a deposit in transit or outstanding checks. Like interest, if your checking account's earning interest, NSF checks, service fees that the bank might charge, or encoding errors. Now, interest may or may not be a reconciling item. It's going to depend on how you record it and when you record it. For this example, the clerk treasurer doesn't post interest earned until the following month when they get the bank statement. So because this amount would be on the bank statement and not on the ledger at the end of the month, the clerk treasurer in this example would have to account for it as a reconciling item. If you waited to close your month until you knew what the interest was and you posted it as a March transaction, so on March 31st, if you posted your interest as $3.21, in this example, you would not have to account for it because it's in your books and it would also be in the bank account balance. Also in the example, the bank encoded a couple of checks incorrectly, so you would need to adjust for them. In the first one, the encoding error took too much out of your account. So to reconcile, you'll need to add that back until the bank makes that correction. So you can see the bank ran a check that you wrote for $100.10 as $110. So they took out $9.90 too much. So we're going to add that back in because they took it out. In the second one, you had a deposit that they actually put too much in your account, so you'll need to back that out. You had a deposit and a receipt recorded at $55.55. For some reason, they encoded it at $55.65, so they actually gave you 10 cents too much. So you're going to back that out. If you're having trouble reconciling at first, double check and make sure the amount you have for deposits and the amount you have for checks agrees with the amounts of checks and deposits on the bank statement. Sometimes it's easy to overlook if there are a couple of similar numbers or transpositions. After adding the balance, all the adjustments and reconciling items, you'll come to a subtotal, or what we call it when we're doing the audit is adjusted bank total, bank balance, which is, you can see that the arrow is like $69,873. So because that was kind of small and enlarged in here, so the arrow shows that subtotal or the adjusted balance at $69,873. The next line down, you would enter your ledger balance of all of your funds at the end of March, which is $69,873.36, and then you show you have no difference, and that's what we're looking for. So on this slide, I also listed the funds. So in this town, in this example, there are 5 funds: a general fund, NVH, local road and street, park, and they have a water utility. So these fund balances are what each of those funds are at the end of March. and they total up to the $69,873.36, which is the amount that you've used up above as your ledger balance. So I just wanted to show you that what you're putting in as your ledger balance is all of your funds in this example, with one bank account, since it's all accounted for there, and how that should all total up and reconcile to your total balance. Here's another method of doing a reconcilement. It uses the back of the bank statement, like I mentioned earlier. It makes adjustments first to the ledger balance up here at the top. So here you would start with your ledger balance, and as we saw from the previous slide, of $69,873.36. Then you make adjustments to the bank statement balance in this lower section down here, where they would have you start with the bank statement balance and then you make certain adjustments to it. So that when you're done, the amount in the box, the yellow box, they should agree, they should do the same. Now, to me, and I think most field examiners, this is a little backwards. We would, like I said before, would start with the bank statement, try to work back to your ledger, or maybe the other way around, start with your ledger and work back to the bank. Here we're making adjustments to both sides, and you're trying to get the number in this box to agree, and it doesn't really agree to anything else on your records or anything, so that's why it's a little not my preference to do it that way. But you can still see using these same amounts. We had interest of $3.21 that we had to add back, and some service fees and NSF checks that had to be taken care of like they were in the other example. And then down here, these encoding errors and outstanding checks and deposits in transit had to be accounted for. They come back to the same number. I listed the fund balances again of those funds that we saw on the previous slide, that total $69,873.36, so that you could see that was what we started with up here on the top section. And again, this number, as long as these two numbers agree, you're reconciling each other, but that number you won't see anywhere else. So I mentioned earlier, if you have more than one bank account, you would add that in. So let's take a look at an example that has that. And we'll say you have a checking account balance for town business and a separate one for your water utility, and then a third bank account for your sewage utility. What you can do is list all those accounts at the beginning of your reconcilement, and then get into your deposits in transit and outstanding checks, as I showed on the previous slide. So you're likely going to have outstanding checks on all three accounts. And it probably would help to list those individually, the outstanding checks on your general account, your water account, your sewage account, or if you were to list them in total, at least have that breakdown, your outstanding checklist that we could look at during an audit. You might also have deposits in transit in all three of those. But this is the same example, this general account balance and the same amount. I've just added a water and sewage checking account balance at the end of March. And we use the same adjustments and everything. And then when we got down to here, we've got a balance of a ledger balance that matches your adjusted balance. So you've got a zero variance. And then I listed in these the sewage utility account. In the other example, the water utility was already in that one checking account, but in this example, it's its own account, and you can see the total of all of these funds is $80,861, which matches what you would have put here as your ledger balance to get back to your total. There we go. So what are you going to do if you go through all that and you have a variance? Well, the first thing you're going to want to do is investigate it. So first, go through your bank statement and make sure that you've recorded every transaction that your bank has recorded. As I mentioned, banks can add things like fees or service charges, automatic withdrawals, direct deposits, and other things that you may have overlooked and not posted to your ledger. Especially the interest. Did you record the interest, and And we talked about how that can be done at the end of the month or in the next month, but you've got to account for that and make sure you have whatever interest the bank adds, you have that recorded. Excuse me. Next, look for things that you have on your ledger that didn't hit the bank statement. Maybe that's a deposit in transit, like we mentioned. Or maybe you recorded a receipt that didn't hit the bank for some reason, probably due to timing. Encoding errors. We know banks aren't perfect, even though they might tell you they are. If you posted a check for $123.45 and they encoded it and ran it through their system at $123.55, then you're off a dime. You've got to account for that. Got a little behind on my forwarding. Next, do you have a transaction that equals the variance? You might be off, $100, and you have a $100 transaction on your ledger, or a $100 transaction in the bank and didn't have on your ledger. That can be a starting point. When you see that amount, you go, oh, I remember that amount. That came up somewhere. You can go back and see what happened, but it didn't make it to one place or the other. And look for reverse transactions. Did you enter a transaction backwards? For example, if you post a receipt as a disbursement, we've seen that a lot of times, or a disbursement as a receipt. That can throw you off. Is there a transaction that is half of your difference? One handy way to find a transaction that you've entered backwards, and this would be only if this was the only mistake that you had occurred, is to look for a transaction that's equal to half of the variance. For example, if your difference is $200, you may have entered a $100 receipt as a disbursement or a $100 disbursement as a receipt. Did you transpose an amount when you were posting? Transpose numbers occur when you flip-flop two digits in a number. For example, you entered $45.89, and you entered that as $54, and you flip-flop the 45 and the 54. Don't assume that you have only one error. If you find an error and it still doesn't reconcile, you can start the process over again, because there are likely other amounts that you haven't found yet. Asking for help. You can always ask for help. A neighboring clerk treasurer might be able to offer you some assistance. If you've done everything you can possibly think of and you still have this variance, you might call up the neighboring clerk and say, I don't know what else to look for. Can you offer some suggestions, or maybe can I send it to you and can you look to see if anything jumped out? They can always be a good help. I know some of you work with financial consultants. If they're not doing the reconcilement for you, that's a good place to get assistance, is to contact them and let them know your bank is out of balance and you've looked and can't identify it, and see if they can give it a shot. And even some banks will offer reconciling assistance. I know they charge a fee for that. It's probably very expensive, but it does exist as a method to getting help. If you've done all that and you still can't identify it, then just try it and wait until the next month. Try and reconcile subsequent months to the same difference as you continue to research that error. For example, if your reconcilement for January was off $24.02, then in February, your goal would be to reconcile to zero, but at least to $24.02. Sometimes things work themselves out in the subsequent month, and you might in February reconcile back to zero. But if you can't find it from January, chances are you may not find it in February either. So if you reconcile to 2402 off that month, at least you know your February transactions that you've recorded and your bank has recorded, they do reconcile because you have that same variance. Then try in March. Let's say you still have $24.02. Well, that's a good way to, again, to know that your procedures are probably working okay. You just had something happen in January that you can't identify. Maybe it was a beginning balance carried over from the previous year, or something in your system that's happened that's created this variance. So the fact that the variance is Consistent is a good thing. It gives you confidence that your procedures are that you're posting are consistent. It lets you know the problem isn't systematic and it's likely a one-time thing that you just haven't had the time or the resources or even the patience to find. If your variance is all over the place, if it was 2402 in January and another amount in February and a different amount in March, then you know there's something wrong with your controls and your procedures, because what you're posting and what the bank is doing just isn't matching up because you're just all over the place with variances. Once you've documented the same variance for several months, you can consider approaching counsel about an adjustment in the amount of the variance so things balance. And that has to be done in a public meeting, and you want to be sure to document that in your minutes. But we would want to caution you, if you do this too soon, if differences start popping up again, you need to go back and look at your procedures, and you don't want to be running to counsel all the time with these different adjustments to be made. Now keep in mind with the whole adjustment issue, we're going to look at that in an audit. In fact, we'd recommend you reconcile to the same variance until the next audit comes. So if you, in that $24.02, if you could reconcile to a difference of 2402 until we come in and have a chance to look at it, we may say we can't find it either and be okay with you at that point to make an adjustment. Just keep in mind, if you make any adjustments in between and they're not properly supported or documented, and that could be an issue. It could be a comment, could even, depending on the circumstances, result in a charge. So you want to make sure that we don't get to the point where we're having to ask you to pay money back because you made an adjustment that can't be supported. And we do talk about that, adjustments and support, in Chapter 1 of the Cities and Towns Manual. I had that in my notes, but I forgot to mention that. I talked about, excuse me, I talked about internal controls earlier, and we have a separate video on our YouTube channel that Susan showed you earlier, and it goes into much more detail than what we have here. For reconcilements, your internal controls and procedures need to be in writing. The important thing to remember about reconcilements and internal controls is to get someone else not involved in the reconciling process to be involved to look at your bank reconcilements. That could be a deputy clerk treasurer, it could be a council member, it could be a neighboring clerk treasurer. Maybe you have an arrangement where the other town is going to forward you their bank reconciliation each month, and you're going to send yours over there, and they're going to review it and look for issues and things. So I get, excuse me, controls are weakened if one person has the ability to receive money, make deposits, post receipts and disbursements to the ledger, and do the reconcilement. So getting at least one other person involved mitigates the risks involved. It can also help with identifying any variances you might have. But you want to make sure you document that other person's involvement, like a signature or initials on the reconcilement. Maybe they shoot you an email and said they've reviewed it, didn't have any questions, and it looked good. We need to see evidence that the other person is involved. It's not enough to just say, well, I do the reconcilement and then Susan reviews it each month. When the auditors come in, if there's no evidence that Susan has reviewed it each month, they don't know if she did or not. So that's a big thing that we're looking for is documentation that your internal controls are being adhered to. Are there any questions? Do we have any questions up to this point about bank reconcilements?
We only got one, and that was if the bank reconcilements had not been performed before they took office, are they able to go ahead and start with 2020?
That's a good question. If you took office and your predecessor hadn't been doing reconcilements, are we going to expect you to go back and do that? We would expect January at least to reconcile, and if it does, wouldn't expect you to go back and have to do those reconcilements. What would happen in an audit, if we were auditing, let's say 1920, and you started in 20, we would have we'd have a comment that 2019 bank reconcilements weren't performed. And we probably have some mention starting in 2020, they were. If you tried to use the January one and it didn't reconcile, and you tried February and it didn't reconcile, then you may have to dive back into 2019 and look at those previous bank statements to see if you can identify what the issue is, because it didn't reconcile when you started your term. We would hold you responsible for the lack of compliance by your predecessor, and we would try to make that clear in the comment that we wrote. So the answer is maybe you would have to go back. I think it would depend on if you did January and it was a variance, if you did February there was a variance, of how much that variance would be. If it was the $24.02 that I mentioned, pardon my voice, I wouldn't expect a whole lot of work on $24, but if it was $2,400, then I'd probably be going back into December and November of that previous year to see if you could find what the issue was.